Investing is often perceived as a domain reserved for the financial elite, requiring substantial sums of money even to enter the playing field. However, this misconception couldn't be further from the truth. In reality, investing is a powerful wealth-building tool, accessible to individuals from all walks of life, regardless of their income level. Even with just $100, you can embark on a journey toward financial growth and security. The significance of investing extends far beyond mere monetary gain. It's a pathway toward achieving financial independence and securing a comfortable retirement. By taking that crucial first step into the world of investing, you're not only harnessing the potential for your money to work for you, but also laying the foundation for a more financially stable future. This video serves as a guide for those who may feel intimidated or uncertain about how to begin investing with limited resources. We'll explore the fundamental investing principles, debunk common myths surrounding the need for substantial capital, and outline practical strategies for getting started with just $100. Whether you're a recent graduate entering the workforce, a young professional looking to build wealth, or someone simply seeking to secure their financial future, this video provides you with the knowledge and certainty to take control of your financial future. So, if you've ever wondered whether investing with only $100 is feasible or worthwhile, rest assured that it is indeed possible and potentially transformative. Join us as we delve into the world of Investing 101 and learn how to turn a modest sum into a powerful tool for wealth accumulation and financial independence. Understanding the basics of investing. In its simplest form, investing refers to the act of allocating money with the expectation of generating a return or profit in the future. While the concept may seem straightforward, the intricacies of investing can be daunting for beginners. However, with the proper knowledge, anyone can navigate the world of investing with confidence. One of the most crucial principles to grasp is the importance of starting early. Time is a critical factor in investment growth, as it allows your money to compound over time. Compound interest is the concept wherein interest is earned not only on the initial investment but also on the interest that has been previously accumulated. As a result, even small contributions made early on can snowball into significant sums over time. Before diving into specific investment options, it's essential to familiarize yourself with the various asset classes available. Standard investment options include stocks, bonds, mutual funds, ETFs, exchange-traded funds, and more recently, robo-advisors. Each asset class comes with its own level of risk and potential return, and understanding these distinctions is crucial for building a diversified investment portfolio. When considering investment options, it's essential to recognize the relationship between risk and return. Generally, investments offering higher potential returns come with greater risk. Conversely, investments with lower risk typically offer more modest returns. Finding the right balance between risk and return is key to developing your financial goals and risk tolerance. By gaining proficiency in these core principles, prospective investors can establish a sturdy groundwork for their financial future and make well-informed choices that will propel them toward financial success. Setting up your investment account once you've gained a basic understanding of investing principles. Setting up your investment account is the next step. Fortunately, with technological advancements and the rise of online brokerage platforms, opening an investment account has never been easier or more accessible. A crucial first step is selecting a brokerage platform that suits your needs and preferences. Consider factors such as fees, user interface, available investment options, customer service, and educational resources. Many reputable brokerage platforms offer low-cost or commission-free trading, making them ideal choices for beginners with limited funds. Before opening an account, it's essential to understand the different types of investment accounts available. Standard options include brokerage accounts, retirement accounts, such as IRAs or 401ks, and education savings accounts, such as 529 plans. Each account type has its own tax implications and withdrawal restrictions, so choosing the one that aligns with your financial goals is crucial. Opening an investment account is typically straightforward and can be completed online in minutes. You'll need to provide personal information such as your name, address, social security number, and employment details. Once approved, you can fund it with your initial investment, starting with as little as $100. When selecting an initial investment amount, it's important to understand your current financial situation and risk tolerance. While starting small with $100 is a great way to dip your toes into the world of investing, you may choose to invest more over time as your confidence and financial resources grow. By taking these steps to set up your investment account, you'll be well positioned to start building wealth and achieving your long-term financial goals. Selecting investments with $100 with your investment account set up and ready to go. The next step is to select an investment that aligns with your goals and budget. While $100 may seem like a modest amount to invest, there are several options available that allow you to start small and slowly build your portfolio up over time. One option for investing $100 is purchasing fractional shares of individual stocks. Fractional shares allow you to buy expensive stocks without needing to buy a whole share, making it desirable for investors with limited funds. Many brokerage platforms offer fractional share investing that allows you to diversify your portfolio with a small initial investment. Another option is investing in low-cost index funds or exchange-traded funds, ETFs. Index funds and ETFs are investment tools that take money from different investors to invest in a diversified portfolio of stocks or bonds. These funds typically have low cost to entry and offer broad market exposure, making them ideal for beginner investors looking to achieve diversification with minimal effort. Robo-advisor platforms are another popular option for investors with $100 to invest. Robo-advisors employ algorithms to design and oversee diversified investment portfolios tailored to your financial objectives, risk preferences, and investment timeframe. With low minimum investment requirements and automated portfolio management, robo-advisors offer a convenient and cost-effective way to invest with just $100. Additionally, dividend reinvestment plans, DRIPs, allow you to reinvest dividends earned from stocks into additional shares of the same stock, effectively compounding your investment over time. While DRIPs may require a more significant initial investment to enroll, they can be a valuable strategy for building wealth long-term. By examining these choices and taking into account aspects like diversification, risk, and expenses, you can construct a comprehensive investment portfolio starting with only $100, positioning yourself for sustained financial prosperity in the long run. Strategies for growing your $100 investment. Now that you've selected your investments and initiated your journey into the world of investing with $100, it's time to explore strategies for maximizing the growth potential of your investment. While starting with a small amount may seem daunting, implementing consistent and disciplined strategies can significantly amplify the power of your investment over time. Maintaining consistency is crucial for the growth of your $100 investment. Even modest, consistent contributions can accumulate gradually and significantly influence the expansion of your portfolio over time. Set a realistic budget for your investments and commit to contributing regularly, whether weekly, monthly, or quarterly. Through adhering to a regular investment routine, you can leverage dollar-cost averaging, acquiring more shares during periods of low prices and fewer shares when prices are high. Reinvesting dividends and gains is another effective strategy for growing your $100 investment. Rather than withdrawing dividends or profits earned from your investments, reinvest them back into your portfolio to purchase additional shares. This process, known as compounding, allows your investment to grow exponentially over time, as both your initial investment and reinvested earnings generate further returns. Staying informed and adjusting your investment strategy as needed is essential for long-term success. Stay up to date on market volatility, economic shifts, and alterations in the investment environment that could affect your portfolio. Regularly review your investment holdings and performance, and be prepared to make adjustments as necessary. Finally, it's crucial to avoid emotional decisions and play the long game when it comes to investing. Market fluctuations and temporary setbacks are inevitable, but staying focused on your investment objectives and maintaining discipline during periods of volatility can help you stay the course when the market changes and ultimately achieve your financial goals. By staying committed to your investment journey, you can unlock the full potential of your $100 investment and set yourself on the path to financial prosperity. Fulu, monitoring and evaluating your investments. As you embark on your investment journey with $100, adopting a proactive approach to monitoring and evaluating your investments is essential. While investing is a long-term endeavor, regularly assessing your portfolio's performance and adjusting as needed will help you meet your financial objectives. Setting attainable expectations is the first step in effectively monitoring your investments. Understand that investing involves inherent risks, and it's expected to experience fluctuations in the value of your portfolio over time. Establish clear investment objectives and benchmarks against which you can measure your progress. Regularly monitoring your investment performance is crucial for identifying trends, opportunities, and potential risks. Most brokerage platforms provide tools and resources for tracking your portfolio's performance, including charts, graphs, and performance reports. Take advantage of these tools to assess how your investments perform relative to the broader market and your expectations. When evaluating your investments, consider factors such as overall portfolio performance, individual asset performance, diversification, and fees. Compare your portfolio's performance against relevant benchmarks to gauge its relative strength and identify areas for improvement. Regularly assess your investment holdings to confirm they align with your financial goals. Adjusting your investment strategy may be necessary based on changes in your financial situation, investment goals, or market conditions. Be ready to adjust your portfolio periodically to uphold your preferred asset distribution and risk level. Consider reallocating funds from underperforming investments to those with more robust growth potential, or adjusting your contribution amounts to capitalize on emerging opportunities. Finally, seek guidance from financial professionals or investment advisors if you need help evaluating your investments or making strategic adjustments. Their knowledge and experience can offer valuable perspectives, enabling you to navigate intricate investment choices with confidence. By actively monitoring and evaluating your investments, you can optimize your portfolio's performance and maximize the growth potential of your $100 investment over the long term. Overcoming common challenges. While investing with $100 offers an accessible entry point into the world of wealth building, it's not without its challenges. Comprehending and surmounting these challenges is imperative for achieving long-term success in your investment venture. Investors commonly encounter the challenge of market volatility. Oscillations in the stock market can trigger periods of uncertainty and apprehension, prompting some investors to make impromptu decisions. Nonetheless, it's crucial to understand that market volatility is a natural component of investing, and attempting to time the market can prove counterproductive. Instead, focus on staying disciplined and adhering to your long-term investment strategy, regardless of short-term market fluctuations. Another challenge is avoiding impulsive decisions driven by emotions such as fear or greed. Emotional investing often leads to poor decision-making and can derail your investment strategy. You can overcome this challenge by staying informed, maintaining a diversified portfolio, and avoiding making knee-jerk reactions based on market noise or speculation. Managing investment fees is another consideration for investors with limited funds. While $100 may seem small, high fees can eat into your investment returns over time. Look for low-cost investment options such as index funds or commission-free ETFs to minimize expenses and maximize your investment growth potential. Finally, staying disciplined during market downturns can be challenging, but is crucial for long-term success. Rather than panicking and selling off investments during a market downturn, consider it an opportunity to buy quality assets at discounted prices. With patience, discipline, and a dedication to your financial objectives, you can transform your $100 investment into a potent instrument for wealth accumulation and safeguarding your financial future. By embracing the principles of consistency, discipline, and informed decision-making, you can transform your modest investment into a powerful tool for wealth accumulation and financial independence. Remember, investing requires patience, perseverance, and a long-term perspective. Whether saving for retirement, planning for the future, or simply aiming to grow your wealth, investing $100 is a tangible first step toward achieving your financial aspirations. So don't wait any longer. Take control of your financial future today and start growing your wealth with just $100. The journey may be challenging, but the rewards are well worth it.